Hello everyone, my name is Nadia Pocher. I'm in the third year of the European Joint Doctorate in Law, Science and Technology at the Autonomous University of Barcelona, the KU Leuven and the University of Bologna. My research focuses on distributed ledger technologies between anonymity and transparency, and in this video I will give you an overview of some aspects of my work. My project covers the legal parts of the Internet of Money cluster of the program. It addresses DLTs in the context of the framework to prevent the misuse of the financial system for purposes of money laundering and the financing of terrorism and proliferation. I explore the challenges that are posed by cryptocurrencies from the perspective of their anonymity and their transparency. Cryptocurrencies can be laundered and can be used to launder money in ways that relate to their technology and their ecosystems. The goals of my work are to pinpoint benchmarks to assess the features of cryptocurrencies with an AML impact and to provide EU regulatory guidelines. The structure of my research goes from an analysis of the IOM landscape through the notions of disintermediation and anonymity, transaction obfuscation and traceability, to then address the regulatory framework, designs of central bank digital currencies as case studies, and finally regulatory methodologies. The Internet of Money is neither a legal nor a technical definition. The term emerged with Bitcoin 13 years ago, but now we have about 20,000 crypto assets. So it is not odd that there are gaps between the so-called blockchain hype and reality. But the hype is very strong and it leaves traces in the terminology that is used. Over the years, initiatives have strived to taxonomize and standardize tokens. The term Internet of Value was created and discussions emerged on stablecoins, DeFi, decentralized finance, and central bank digital currencies, CBDCs. In my research, I apply a broad interpretation of the IOM, focusing on the monetary part of the IOV. On top of this, the IOM is an ecosystem of socio-technical ecosystems, which also means that its features, such as also anonymity and transparency, are affected both by technical and social elements. So, as I said, the regulatory scope of my work is the prevention of money laundering and the financing of terrorism and of proliferation. On the right-hand side, you have an overview of the duties. The framework relies on regulated entities acting as gatekeepers to monitor financial flows and report suspicious events. The Financial Action Task Force, FATF, provides international standards that in the EU have been so far implemented by a series of directives of so-called minimum harmonization, such as the fifth AML directive that extended the application of AML rules to two categories of service providers related to crypto transactions. Last year, the European Commission published a proposal for a comprehensive reform that we will address shortly. Here you have some examples of how crypto flows can be obfuscated, with references to the traditional phases of the laundering process, but please bear in mind that in reality these phases are more interconnected. We have Alice, who decides to convert some euros into bitcoins. If we assume that she is a launderer, her problem is that the entities that convert euros into bitcoins, so fiat to crypto exchanges, are regulated, which means they will ask her to provide identification and they will verify her identity. But afterwards, once Alice owns bitcoins, she can make use of providers and types of cryptocurrencies to disguise the illicit origin of her funds, such as mixing, and to sever her identity from the money. After that, she can employ ways to store and use her cryptos to further anonymize her activity, and she can also, for instance, buy illicit goods on the dark web, for which she would likely at least use a VPN. So you may have heard of disintermediation, but there are actually a lot of intermediaries operating with cryptocurrencies. There are, however, important evolutions in this sphere. So here we have Alice that wants to make transfers to two friends. And we have a difference because Julia's account is hosted by a provider of custodial wallet services, while Tim owns a self-hosted wallet. So with self-hosted wallets, there is no entity that stores the private key on behalf of the customer. So if Alice sends money from her self-hosted wallet to Tim's self-hosted wallet, we have a true disintermediated peer-to-peer transaction because in between there is no regulated or regulatable intermediary. In 2021, the European Commission presented a package of legislative proposals on anti-money laundering. The main points concern the creation of a single rulebook through regulations to avoid fragmentation and the creation of a EU-level supervisor. So, moreover, there is the recast of the regulation on information accompanying transfer of funds that now doesn't apply to transfers of crypto assets. And so it would introduce the obligation to collect and share data on originators and beneficiaries, also in this case. It is the so-called crypto travel rule. Self-hosted wallets generate a twofold issue in this respect. And this is because peer-to-peer transactions, that are the ones self-hosted wallet to self-hosted wallet, would elude the requirements. And so regulators are considering restrictions, but the debate is very controversial. On the other hand, if regulated entities want to receive a transfer from an unhosted wallet or want to make a transfer towards a self-hosted wallet, they do not have a counterparty entity. So to obtain originator and beneficiary information, they can only ask their clients. But this, of course, generates another series of issues. So for this reason, providers could reject the transfer altogether or could generally apply a de-risking approach to these kind of transfers. In a press release from last week, the European Parliament announced the intention to cover unhosted wallet transactions when there is an interaction with a hosted wallet, so when there is a regulated entity involved in the transfer. Otherwise, for peer-to-peer transfers, the situation stays the same, that they are outside the scope of regulation, at least for now, in line with the fact that person-to-person transfers are not covered by AML regulation. All over the world, central banks are investigating central bank digital currencies, such as the digital euro, for instance. The most transformative type of CBDC is known as retail or general purpose. It's a tokenized version of fiat money. It's digital cash available to the public. On the other hand, wholesale CBDCs are for interactions between financial institutions. So the two sets of projects respond to different needs, and retail CBDCs can have different architectures and involve public and private stakeholders. The model can be one-layered, where only the central bank is involved, or two-layered, when there's the involvement of other financial intermediaries. So there are different two-layered models, and the technology to deploy is debated. The design can include different types of wallets. For instance, in account-based wallets, access relies on identification. In token-based wallets, on a cryptographic scheme. A hardware-based wallet uses built-in technologies to guarantee security, but security can also be guaranteed through cryptography and protocols at a software level. And offline usability presents trade-offs between security, costs, and convenience. Here you have a taxonomy of privacy transparency trade-offs in CBDCs, showing 5 case studies based on benchmarks of confidentiality and auditability that mostly rely on different types of privacy-enhancing technologies. There are 3 big categories of trade-offs, so fully transparent models, unlimited privacy, nuanced solutions that are deployed by most projects, offering some degree of privacy in terms of confidentiality to users and some visibility to authorities in terms of auditability. To summarize, the IOM is at the heart of significant developments that are challenging also from an AML perspective. Anonymity and disintermediation are a problem, but what makes it more complicated is that they are socio-technical concepts and that they keep evolving. So my research tries to narrow the gap between these notions and the AML regime, while research on CBDCs offers insights into the modeling of trade-offs between privacy and transparency. I want to thank you very much for your attention, and please do not hesitate to contact me if you have any questions or any comment. Thank you very much. Goodbye.